What is going on, everybody? What is going on? You know what to do. If you are watching the Working People's Podcast here with me, James Hollingsworth, your illustrious host over there on YouTube, press that subscribe button and go ahead and do something else for us. Give us some thumbs up, drop some comments below, and ring that bell so you will get notified when we are uploading new videos and content right here on the Working People's Podcast. Also do the same. Throw some thumbs up for us, drop some comments below, and also share this video because we got a special guest with us tonight. And also on my personal page, do the same. I'm going to be monitoring the comments, and hopefully we'll get some people dropping some comments and asking some questions for our special guest, because I'm telling you, when you can get some people like this, you better be asking questions in the comment section, because, you know, we may not have this opportunity. It's like, I think they say, I may not have this chance anymore. So we're going to be able to get some questions answered. And if you have some in the comment section, drop them. Also press that thumbs up like button here on my personal Facebook page, and do the biggest thing that you can do for us. Share this content with your friends, your family, your cousin names, your aunties, your grandma, big mama. You know, share it with all of them. If you got to share with your cats and dogs so they can get in on it too. And also, thank you once again to Rodney Williams and Second Friendship Missionary Baptist Church, the SHIP. Right there, we thank you all for letting us stream live to your Facebook page. Thank you, Brother Rodney Williams. So tonight we have with us, or this evening, for her, it's like early evening. We have with us a special guest, and I'm going to let her introduce herself and give us a little bit of background. Tell us about yourself.
Hey, everybody. So nice to meet everybody. My name is Sharita Green. I am currently a licensed life agent in about 15 states right now. I'm also a tax expert as well. These are two businesses that I run full-time as an entrepreneur. I currently reside in Las Vegas, Nevada. Only been here for a couple months. I just moved from St. Louis, Missouri. So I am here to, help with this mission of yours. I'm super excited.
Super excited. So this is what we're going to do. We got some special, if you've seen the little, what I call it, the what do you call it when you give up a title or something? The title, that's what it is. If you've seen the title, we're going to be talking about becoming your own bank. And I'm telling y'all right now, y'all want to get in on this one. Becoming your own bank. So when we talk about this, there's going to be some things that we're going to bring up and discuss that's going to have you like, what? It's going to have you scratching your head. So as a disclaimer, one thing that we always want you to do, and that's educate yourself. Really get in and begin to study, because there's going to be some things that you hear initially, and it's probably going to go over your head and you're not going to understand it. So you might have to watch this video twice, and if possible, you might have to watch it 3 times. So Sharita, as we kind of get into this, and you mentioned about being a life insurance agent, licensed in how many states did you say?
15. And last time I counted 15. Yeah.
15. Are you licensed here in Michigan, my chance?
Michigan is not one, but it only takes me a few minutes to get licensed in most states.
Come on. So that's one thing y'all need to do. When y'all get through this show tonight, you all probably going to be wanting to hit her up. I'm going to make sure that when I do post the final video, once we close it out, that we have her tagged in this video so you can hit her up, because I'm telling you right now, when she drops some of these nuggets on you, you're going to be wanting to get some life insurance. I'm telling you that right now. So one of the first things I want to do was ask you about, do you believe in people having strategies, financial strategies?
Absolutely. Absolutely. Because how else can you reach financial goals without having a plan in place? It just won't fall in your lap. You like with everything, every right. Goal, you have to have calculated strategic steps you're going to take to reach that goal. And that includes your finances.
Absolutely. So I'm assuming that means that you have a plan.
Yeah.
You and your family. Absolutely. So Now, we know that when the CPI numbers came out on July 13th, inflation had went up to 9.1%. What's your thoughts on can we even is it even possible to have your finances where you're recession proof, where you're insulated against inflation and the higher cost of living? Is that even possible? Let's stick for yourself example. Have you missed a beat during this time with inflation going up? Has it concerned you?
Not one bit.
Either.
Nope, not one bit. When I came, me and my husband were just joking. We was like, "Did you see that gas went down?" And I was like, he was like, "You know what? I didn't even pay attention to it because you got to get gas anyway." And I was like, "Well, it did go down some, but prior to moving here, part of our strategy that we put in place was that we had to have certain finances in place. There's a slightly higher cost of living here from Missouri. So we knew this coming here. You know, we calculated all of this. We, put our hustles in super grand mode before we left. And we made sure we had what we needed before we made that move. And inflation, everything's inflated from the butter in the store.
Absolutely.
To gas to
Don't even talk about no chicken wings. I know all the necessities. Eggs, chicken wings.
Yes.
Milk.
Not only the inflation, but just the cost difference from the different states, right? Things that, we never really, we may have used to really pay attention to them. Now, because of those calculated steps that we've taken, we really don't even pay attention to them because we have to buy them anyway.
Absolutely. That makes a lot of sense. So that's what we're going to really dive into some stuff tonight, y'all, because a lot of people been struggling right now. And we want to talk about how you can recession proof your finances. Because whether or not you believe it, costs is not coming down anytime soon.
Right.
And as well as the Fed and our government, the congressmen, the people that's getting paid by our tax dollars, they stressing out right now because they're catching a lot of heat and a lot of pressure. But we as people, we need to be forward thinking, and we need to always live our lives where we recession proof, where we market correction proof our finances, where we're not, like, oh God, having to sell all our boats and motorcycles. Sharita, here in Michigan, a lot of RVs are for sale right now on the side of the road.
Wow.
Yes. So y'all heard her say, not skipping a beat, planning for times like this. So one thing I want to bring up is, and I got myself some notes here, is we talk about ownership. And I think this is the foundation and the platform that we need to build our finances on. Now, I know I'm getting ahead of myself when I say that, but when we talk, just the name ownership in itself, what does that mean? What does that speak to you when we say ownership?
Ownership to me is, of course, I feel like it's a necessity. Ownership means that this is something that I've acquired, that I own. No one can take it away from me. Things that I acquire, I'm planning on having available for my children's drink. That I solely 100% own, that I could pass down as part of my legacy to children, grandchildren, and thereon, because I'm on the path for generational wealth. Absolutely. So ownership is a necessity. It is something that I urge every single person to think similarly to me. I literally just got through watching the top 10 richest black people in the United States, and
we dropped. So let me get her back on. And y'all hang in there with us. We just lost Sharita. I'm gonna get her back on. Let me tell her to use that link to join back in. Join back in. Devil, you a liar. Ha ha ha. Okay, so I'm telling her to connect on that link again and join back in. There we go. I think we got her. I don't know. We got a break or something. Something happened in the internet where we got to just everything dropped. So I joined us right back in.
I don't know what happened. Can you hear me okay?
Yes.
Okay.
Hopefully you didn't forget your thought because you were spitting fire right there.
All right. So I was looking at, we were looking at the richest Black people. And one of the things, like it showed the top 10 people, of course, Oprah was up there. You had some hip hop.
Huh. I think I know what the problem is. Okay, I think I know what the problem is. You know what? I think I might know what the problem is. Did you just happen to get a text message or anything? No. Nothing? Okay. I don't know what happened there.
I have my phone on Do Not Disturb right now.
Yeah, I don't know what happened there.
Would you like me to try from my computer? I can.
Let's try it one more time right here, and then if it does it again, then I'll try that. We'll try the link on the computer.
I definitely turned on Do Not Disturb because I didn't want any interruptions.
Yeah, not sure what happened. I got unless we having a power outage over here or something. I said the devil is a lie because he already know that this is going to help some people. So we rebuke that in the name of Jesus, and we're going to go ahead and progress forward.
What it is.
So you were watching the richest. Was that a YouTube video?
Yeah, it was on YouTube. And under each person's like net worth, it showed what their titles were that helped them reach that status. Right.
Okay.
So many of them had real estate as ways that they accumulated wealth. So I'm like, we got to get, both my husband and I were watching. We were like, we got to get some more properties. Real estate is definitely the route to go.
Yes.
As far as ownership of anything, but not only just tangible things. You want to own things such as be an owner of any foundation, of any wealthy person that you ever research. One of their pieces of their foundation is an insurance product. I guarantee you, because this is one of the best and fastest ways to create generational wealth, believe it or not.
Absolutely. And we're going to get into that today. There's been two things that I've been a little hesitant to really talk about and dive into. And one of them is the ideal of leveraging and how you can use debt and borrowing against assets that you own to extract equity, as well as we haven't really gotten into the life insurance part, which we're going to dive into tonight. So I'm telling you all right now, you don't want to miss this here podcast show, because this stuff that we're going to talk about tonight is life-changing. And it is techniques that wealthy people have used for years, for centuries, to not only maintain their wealth and sustain it, but to grow it and to pass it to multiple generations. So that's one of the things we're going to really dive into tonight. So when you were talking about the ownership piece in real estate, in that video, was Don Peoples one of the people that they highlighted in that? Do you know who Don Peoples is? He's like a $700 million real estate, guru investor guy.
You know what? I didn't see Don Peoples on there, but it could just be that this particular one,
right?
Didn't highlight that.
Yeah. So when we talk about ownership, it's the idea of getting assets that you own. Now, I sent you in some notes. I mentioned to you about a friend of mine who, he said it to me again today as we were talking. He said, well, I don't believe that we ever going to be free and we can really own anything. Even if you pay your house off, he said, you still owe taxes. And if you don't pay your taxes, the government can take your house. And therefore, it's like he uses that and other things not to actually own a house, a personal home for him and his family. So even, have you heard some outdated ideals and philosophies and things people will say to you when you start talking to them about home ownership or just investing and real estate? Do you hear that kind of stuff people say to you?
Yeah, and it really shows the lack of knowledge that we have in our community.
It saddens me that so many people choose to, rent their entire lives. And then what's even more sad about it is that they pass on the unhealthy financial habits to their offspring. And so we have a whole new generation of people with the same mentality. And when there's people like myself that try to educate on the importance of these things and how you could benefit, tax time or benefit from, just any of the benefits, you get met with, so many objections and things that they've learned that just really shows where our mentality is as a people and how it's hurting us so badly. Badly.
I'm going to show you the statistic on screen and ask you, Sharita, have you ever seen this statistic? Because when I saw it for the first time, it was staggering. I was like, unbelievable. That number 3 there talks about the Federal Reserve reported in 2016 that the average homeowner had a household wealth of $231,400 compared to the average renter having a household wealth of just $5,200.
Wow.
That is a staggering gap.
Woo. Yeah, that's a good 225,000 dollar gap.
Yeah. And that came straight from the Federal Reserve Board.
Wow.
And that study was done in 2016. And since that time, home ownership for African Americans, for black people, has actually decreased. So I think we really need to just, I don't know what else to do. Sometimes I don't know what to say, when I'm trying to encourage people to even start with, that's the basic. Home ownership is the basic.
Yes, it really is. I think it really comes from what society has told us, what we've learned, because there have been several things I have to unlearn. I had to unlearn when I came into the financial services industry. Like, literally, don't do that. You've been taught this in your entire life. So what I strive to do is literally pass that literacy on to someone else, whether it falls on deaf ears or they take heed and do something differently. At least I've done my part in sharing the information.
That's good.
I think that's going to be the way to fix that problem. Just getting as much financial literacy out there. We have to show why things happen the way that they do, and most of it is due to lack of planning, lack of knowledge. And if it's just those things, we can show people how to plan. We can show people, what they need to learn so that they can have that mentality shift, thinking a little bit differently. Even if it's just one thing that you can do, it's going to help. It's going to help either the next person, your child, whomever. It's going to help you because you're going to do something slightly different, and someone's going to see you do that slight different thing, and then they'll mimic it. You know what I mean? So it's just getting as much of the information out there to us to help, level that playing field. And you can either take it and run with it, or you can, rebel against it, whatever you want to call it, and stay where you are. But you can't complain about it at the end. After you know the information, you have to do something different because you know better now. It just makes sense.
Absolutely. I love when you said about how you had to unlearn some things.
Yeah.
And I think that applies to all of us. I know I've had to unlearn some things, and even some of the things that I thought was good, and one thing that I mentioned and wrote down was, it amazes me how many people complain about the outcomes they're getting, but they keep doing the same thing. They haven't changed anything.
Yeah.
But they're the ones, the main ones, they're complaining themselves about the outcomes that they're getting.
Yep.
And when I thought about unlearning, I was like, is unlearning also, do you think that includes our spending habits?
Absolutely. Absolutely. Because so many of us have watched our parents, for example. I have a mom that worked my entire life as an RN. Like, she went to school while she was pregnant with me, right? So by the time I started noticing her, all I seen her do was work. Yeah, we didn't we were not wealthy. We didn't we didn't go on trips as families. I didn't have a bank account. I didn't have a life insurance policy. There's things that I just noticed her work so hard to do, and I've never seen her really reap the rewards of that. And I noticed she inherited financial habits from her mom.
Wow.
You know, and we've been in survival mode so long. It's like, how do you break that? Like, so what I did was I observed her all those years. Yes, I got the work ethic from her. I'm absolutely glad I did. But once I became an adult, I had to decide whether or not I wanted to live that same kind of life. And I decided that, no, my children need me here in the present. I had to find a way so that I was in the home as much as possible versus what she did. And I don't knock anything that she did. It was 8 of us. 8 children, you know what I mean? So, hey, I get it. And I love her for that. But I knew as a mom that that's not the route I wanted to do. I wanted to be able to make as much money as I can in a short amount of time, working smarter, not harder. That way I can be there for those milestones when my baby walked, when she attended kindergarten for the first day. Those are things that are I hold near and dear to my heart, to be able to witness those things. So I stumbled across financial services industry, and it has welcomed me so greatly. It loves me. I love it back. And just the educational piece, everything that I've learned, these children that I raise over here, they're going to be all the way together. I have no doubt and fear about anything and their children, because it started with me. It started with me shifting my mindset to where I, wanted to see long term the results of my actions today.
Now, my plan, there's stages to it, right? So the initial stages of it is about 12 to 13 years long. Then the subsequent phases of my plan, which I've already put many of them in place now today, they're 30, 40 years up the road. And then I have the plans that includes passing everything to my children, my grandchildren. My plan includes the next 4 generations of my family to be taken care of and things to be in place for them. So when you talk about a plan, can you give us just kind of an idea, what does that look like for you and your family?
Okay, so one of the things that I said that I am actively, it's on my to-do list, about halfway there, was that I said for each of my children I was going to acquire a property, right? I wanted to, at the time that they become adults. Just a second. Hold on. I'm in a meeting, Sion. Come out. I see. It's beautiful. Thank you. I'm sorry.
One of the lovely
my daughters
ones
with Downs, and sometimes she just,
One of the lovely children.
I was going to acquire a property for each one of the kids. That's something that I could pass on down to them. And while I acquire it now, teach them about taxes, teach them about how to maintain a property, how to use the property for equity in the future, how to take out money if you want to rehab it, whatever. They'll have that educational piece as they get older, because my youngest is only 6. My oldest is only 14. So I have some years to educate them on, but I'm going to acquire the properties now. So I have 2 of the 4 that I need. So I'm working on that. So that was one plan. The second plan was to incorporate and make sure that I have these children with the correct type of life insurance-based savings. So I made sure I took out on each of my children, and including myself, an indexed universal life policy. This is to set them up so that they absolutely don't need a bank. Now, I plan to, with small sacrifices that I have right now, financial sacrifices, pouring money into their policies so that when they reach my age, I'm 40 now, when they reach 40, they can just go pull money out when they need to.
Absolutely.
Take the money out. And guess what? It's not affecting their life policy, which is also there. So we're killing two birds with one stone. Having those two things were the most important. So I have that aspect out the way. And as my income increases, more money will be going into their savings bucket of their IUL to grow that. And I plan to not even let them know exactly what that is until they become adults. That way, those years that have passed, that money has compounded, and that money is there. They don't even know it's there, but it's going to be there, and will be, by that time that they're adults, they'll know how to use it in the best way possible.
Absolutely.
If they need to.
Mm-hmm. So now, before we dive some more in that, if you have any questions about some things that she's sharing, please start dropping those down in the comments section so we can hopefully try to maximize this opportunity. She maybe can answer some questions. Now, mind you, she's in the field of life insurance, and we're going to start talking to her, and we're going to start having a conversation about how you can begin to use this financial component of life insurance to build generational wealth for your families, and it's very, very doable. But before we get into that, I want to say again, educate yourself. Some of these ideals are not going to be fundamental thoughts that you're going to even see or hear from some pretty well-known people in the financial space, right? But we're here to tell you wealthy people have been doing this for years, right? And it works. If you want to even know some more, start looking up Dr. Jamisa Bennett. Look up Marvin Mitchell. This concept here is a basic, fundamental, foundational financial principle that you can implement in your financial plan to build generational wealth and pass it to your children. Now, before we really dive some more into that, I hope y'all picked up the nuggets that she shared already. I want us to briefly kind of talk about the ideal of leverage. Because one of the problems I see is the mindset, and I'm okay with that, the debt-free mindset. There is a way that you can live debt-free in your day-to-day expenses in terms of vehicles, cars, all of that stuff. You got to set yourself up to be able to do that, though. Because if you start using all of your cash flow to pay for things that are depreciating assets like a car and other things that you want, you're not using your money and putting it to use to appreciate and create more cash flow. So when we're talking about leveraging, we're only talking about using debt and credit and some of these principles that we're going to share in this show so that you can obtain appreciable assets that will grow in value and things that you can create cash flow for yourselves. And woo, Jesus, oh my God. So when we're talking about debt, and the frame of reference where people start saying, well, I don't believe you should have debt. Live debt free, pay for everything cash. The problem with that is those dollars that you spend can't create future dollars. Your money can't get pregnant if you're using all of your cash flow to pay for things. The ideal behind the things that we're going to get into right now is talking about making your money pregnant. Making your money reproduce itself. Making your money have little babies. All right? So, you talked about extracting equity, right? Mm-hmm. So let's really get into that. What is this idea of extracting equity? Because you can't extract equity out of something that's not growing and appreciating in value. So can you dive into that some more, even if you have to use some examples of what you mean by that, extracting equity that you could use at a future date, a future time?
Okay, so since I'm in let me see. I talked about real estate and I talked about life insurance. Those are two things that most definitely you may only associate equity with real estate, right? So equity is above, over and above what you owe on something. that is there available for you to pull out if necessary, to use for certain things, because the property itself is valued at more than what you owe on it. Okay,
Yes.
so that's what equity is the value in something above and over what you owe on it. So, in an example of property, real estate, of course, you want to, as early on as possible, purchase property.
Yes.
Make sure it's somewhere in a location that is going to appreciate in value. We were taught so badly that you go acquire all these properties, but they're in areas that are not gaining any value,
Absolutely.
because we want the lowest taxes, right? But
Right.
lower taxes equate to worse school districts. It equates to basically the quality of neighborhood that you live in. These are things that are counterproductive to what we're trying to do. So
Absolutely.
you want to make sure and do your research that the properties that you do acquire are going to be in places that they're growing. You want to see new development. You want to see, not so many liquor stores. You want to see where people take care of their landscaping. You want to see, higher standards of living all around you, because that equates to more equity for you, property values. And when you do that, you're going to attract different types of developers in the area. You're going to be able to grow that equity in your home. And that's a good example of unlearning something that I've been taught.
Yes.
Somebody asks, I can see some of the questions. Somebody asks, what's an example of something you had to unlearn?
Okay, good. Because I was going to ask you.
Something
I'm
that I
glad
had
you.
to unlearn.
Okay, I'm glad you saw that. Okay.
So definitely that's an example from real estate, because I want my property to do so well that my equity grows. So that it's accessible. If I ever need to touch it for any reason, it's there, for me to use. And then in an example, in life insurance, there's, I talked about an IUL, which is an Index Universal Life Policy. It is an example of a whole life policy that not only covers you until 120 years of age as the premiums are paid, but it also is building cash savings that is on average 4 to 12%. Which is way higher than any bank,
Absolutely. Way higher.
any for-profit bank. Because right now, the last time I checked, I was receiving in my bank account less than 1%.
Absolutely.
Less than 1%, 0.0 something.
Yep.
So another thing I had to unlearn is that my money should first go into my bank account through direct deposit, and then in my savings account where it's earning even less, or it's just low, period. No banks are offering anything because they're for profit, right?
Absolutely.
Not knowing that bank is able to utilize the same kind of insurance policy that I'm telling you about today to ensure your money that's there. They're taking your money and they're doing the exact same thing that you have access to doing with your money, and they are making a profit off of it because your money's with that bank. But in the example of life insurance, when you have a policy that is properly structured, you have access to funds, and this is considered your equity because it's over and above what you are paying into the policy that you have access to because it's growing. There's interest that is growing and compounded in these types of policies.
Absolutely.
So that's the two examples I use and how it relates to equity and having access to it, how to grow it.
And I hope y'all taking notes and come back and watch this again, because I'm telling you right now, this is a lot of stuff that we have had to unlearn and we didn't know about. And there's people that have been using these tax principles and these forms of creative financing, so to speak. Literally, that's why we call this becoming your own bank. Because as you build equity through appreciable assets, as you build equity, you're able now to access your equity and use that. Now, one component that I want to bring up about the life insurance is when you go to quote unquote extract or borrow against that policy, you're not borrowing against actually borrowing your own money. The life insurance company is lending you money against and using your money that's still compounding and growing. They're using your money as the collateral to the loan. And the loans, the interest rates are not like crazy outlandish interest rates like you go to a bank and then they tell you, well, your credit score is 630, so we gonna loan you this money, but it's gonna be at 19%. No. So you can now go to the, and I'm gonna let her explain it more. You can go to the life insurance company, make a phone call, whatever. It ain't no questions. They're not asking you what you want to use the money for. Well, we got to check and see what your credit score is. None of that. And they will loan you however much you ask for, as long as you got the value there to get it. And your money will continue to grow and compound. And if you think 4% ain't enough, I'm trying to tell you, if you've been watching my podcast show, 4% is enough to outpace historical inflation numbers. Drop the pen and the mic on that one.
And how about some of these policies, the bank's not even backing you for the money because it's building cash value.
Yes. So
certain types of policies, including the IUL, Index Universal Life policy, the cash value that's growing on that 4 to 12%, you can just go take it out, even if you want to go take a trip, if you want to pay off some bills. And guess what? It does not affect your face value of your death benefit.
Nope.
On above and beyond. So the standard life insurance policy, whole life policy, if you were to borrow, you could borrow against it. But remember, IUL is not your standard whole life policy. Right. It is building cash outside of the face value, meaning whatever your dollar amount of your death benefit, that's separate from the cash that's growing in it. And it is available there for you to use for any reason whatsoever. You don't have to go fill out certain forms. And what's even better is tax-free money.
Y'all ain't ready for that. It's tax-free. Did y'all hear that? Tax-free.
Yep. Yes.
Hey,
so someone in the comment asks, can I write insurance policy in Missouri? Absolutely. That's my home state. I got licensed there first. So absolutely. I would love to chat with you. Just give me a call, contact me. I'd be more than happy and we can go over all of this. But yes, when I was going through my course hours, learning about this, when I first entered the life insurance business, I was blown away at the amount of information I did not know. I wish so badly I could go back 20 years and redo this life with the knowledge I know now. I guarantee you I would have been a multi-millionaire by the age of 40. It's okay though. It's okay. You know, I know it now and I know how to help people get to that same status. So I'm super excited. Like I was like, oh my God, you cannot tell me that this has been around all these years and I didn't know anything of it. I've had, like with my first child, I had a life insurance policy with State Farm. State Farm never told me that there was another kind of policy out there that would benefit me more than them because they are for profit. And, you know, but that was on my part, you know, not doing my due diligence, you know, but I know now and I can do better. Now that I know better.
And here's the other thing too, everybody, and thank y'all for coming through the comment section, is when you get ready to take your last breath, guess what happens to your death benefit and all of that stuff when it goes to your kids? You think they got to pay taxes on that?
Nope.
Say it again, Sharita.
Nope.
Nope. Yeah. Tax free. There is even a way where some people are taking their retirement dollars and now turning them into a permanent policy and using some of those investment dollars that they've acquired over the years of investing and stuff like that. They'll take those investment dollars and put them into a permanent policy so that they can take a portion of their generational wealth that they want to pass to their children so they can do it now tax free. So, as I always say here, we're trying to help you. And I know there's a lot of people that will tell you there's a name for when we talk about becoming your own bank. It's called infinite banking, if you've never heard that term before. And there are people that are mainstream, very, very well-known people that will tell you, stay away from this. It's a scam. It's a sham. It's a this. It's a that. But we're trying to help you and tell you it's not. And if anybody knows me well enough to know that I do my homework and I look into stuff real deep before I buy into anything, and you ain't gonna just tell me something I had to can you imagine if Sharita saying stuff she had to unlearn? For a while, those of you that know me from the past, I was in the investment space, in the corporate investment space, and I know the stuff that they say, these are the things that you teach and these are the things that you try to set up for your clients, and this is how you build a portfolio, this is how you do this, that, and the other. And I had to take some of those things and be like, wait a minute now, yeah, that's great, but that's still consumer minded stuff. I'm gonna tell you right now, a financial advisor will sit down and tell you don't exceed a certain percentage over your income if you're going to purchase a house, and that debt along with your car don't exceed a certain percentage of your income. I'm here to tell you that's foolishness, and that's for nargle. That's some made up stuff. If you go and buy the maximum amount that they say you can afford, guess what happens? Now you cannot take those dollars that could be working for you in an index universal life policy or in other types of investments, in real estate, in whatever. Now you can't take those dollars and put them to work for you. You know why? Because your house burden. That's the nice way that they've come up to make you not feel so guilty about you overpaying for something. Because I'm going to slip this in. I told you sometimes, Sharita, I get passionate about this. I've shared with you all about the study that was done in 1954, The Secret of Selling the Negro. And they hired psychologists, the United States Department of Commerce. They hired psychologists to study the buying habits of African American black people and said they had been studying our buying habits since 1939. And in that video, that documentary from 1954, The Secret of Selling the Negro, they said that the number one thing that they found out about the Negro is they like to impress people and they like to buy expensive name brand stuff. And that's what's keeping us broke.
Ooh, yes.
Stop talking about the white man trying to keep us from this, the white man doing this, and the way. Stop spending your money irresponsibly. And let's take accountability. Because we got the money. 2021 statistics show we have $1.6 trillion of buying power in America. We're number 3. But statistics also show that currently black people, African Americans, we hold the least amount of wealth of every major ethnic group in America. Only 2% population of millionaires. So we got to start taking accountability. So now we're talking about extracting this equity, right, Sharita? Mm-hmm. So let's talk about the element of, I know some people say avoid debt, stay away from debt. But if you can extract the equity out of your property and borrow against your own equity and still keep your dollars invested so they can continue to grow, let's talk about the idea of why would you do that? Right? Some people say, well, you know, I want to put a new roof on my house, or I want to buy a new car. But what we're trying to tell you is take those dollars and put them into something that's going to grow and appreciate more. Think about it. If you extracted some equity out your house and you can make that grow at 12% in an index universal life policy, and then you could pay back the loan at 3%.
I mean, it only makes sense. one reason you want to pull out the equity, especially in your home, would be to update it.
Yeah.
Update it. Make your house more valuable. Make more equity for yourself.
For yourself.
For yourself. And I mean, ultimately, that's what you want to do. We have to start normalizing living within our means.
Absolutely.
If we can't live within our means, we need to learn how to make more income. We want to be, nothing wrong with the designer brands, everyone. Nothing wrong with that. But be able to afford them. Be able to have the income there that justifies it.
Absolutely.
So many of us impress people that don't care anything about us. You know, yes, I'm someone that likes design. I said at the end of this month, when I reach this goal of mine, I'm definitely buying me a Louis Vuitton bag.
Come on now.
I can afford it right now.
But what can you? What
does it make sense to own it right now?
Right.
No, it doesn't make sense. It's a reward for myself.
Yeah.
But with that goal is an increase in income. So it makes sense.
Yes.
So if we are purposely wanting to impress people by having name brand things, we need to also understand that there's a hustle that needs to go along with it so that we can increase our income so that it makes sense. That buying power that we have, it can totally be recirculated with us. We can get these businesses up off the ground. We can take that equity, go start a business.
Come on.
Anytime you're going to pull some money out of something that you own, you want to put it into something that's going to make you some more money.
Come on. I'm trying to help you.
It just makes sense.
It makes sense.
It makes sense. We've seen our parents struggle, work multiple jobs. We don't want to do that. I am a 80s baby by heart.
Absolutely.
I grew up with computers, right? I'm going to make these computers do every single thing that they were meant to do so that I don't have to work as hard. Like, I want to retire my mom so badly. I can taste it on the tip of my tongue. I'm just going to cut her a check for her salary for a year, for the next couple years, and it's going to feel so great.
Absolutely.
So great, because I plan for this. I plan to take her out of the work field, you know, because she needs to sit down and enjoy life. And more of us need to think that way. While we are young, able-bodied, we have the resources, we have the knowledge, we have the buying power. We can totally change the trajectory of our family's futures.
Sure can.
We wholeheartedly can do this.
Sure can.
You just have to have that mindset shift. You have to not want to impress your best or outdo your best friend on who's the flyest. You have to take calculated risk. You have to put your money in places where it's growing. And yeah, it may not keep up with the cost of inflation, but I guarantee you once you put your money into these types of vehicles, inflation will be the least of your worries.
Least of your worries.
The absolute least.
Least of your worries.
And if you are lucky enough to get into the financial services industry, times like this where there's inflation going on, we make the most money. Not like retail, not like the car industry or other industries out there that during a recession, because we are definitely in a recession. It just hasn't been labeled that yet. Anytime you have 2 quarters of downward turn in the stock market, it's a recession. Now, whether they want to market that or not, that is the technical term. You can go look it up.
Come on, Sharita. Come on. Go look it up if y'all don't believe us.
We in a recession. Hey, now, do you want to be in a recession and struggling? Or do you want to be in a recession and be able to make money, more money, make your money work for you and making more money so that you're not bothered? This season should be called Unbothered. Because, baby, I am unbothered by all of this.
Me too.
I am so unbothered by it just because I know that I've placed my money in places where all of my principal is protected. I'm protected from not only taxes, but I'm also protected from losses. And I've learned these principles with just entering the financial service industry. And I will speak it until I die. on any and every platform. Anybody that's going to listen to me, that this is where you need to place your money. And it's different for everybody. You know, I'm like one of those last people that worked for a company that offered a pension. I didn't even know I had a pension. I got something in the mail the other day, and it was from AT&T. They said, hey, well, you worked there for 8 years. You earned a pension. And I'm like, what is a pension? Like, people in our 40s, we don't know what a pension is because they went away when our parents, were in the work field. But I have an actual pension, and that's money that, if you don't know what a pension is money that is placed away. The employer puts it away into a pretty much an annuity, and it pays you once you reach a certain once you reach retirement age. It starts to pay you income on a monthly basis. So while they're few and far between now, because most companies don't offer them anymore, I was lucky enough to work for a company that did, and that's just money that's going to help me be able to live, and who knows what the cost of living would be then. By the time I retire. But I don't plan to be actively working for anybody. Like Absolutely. James, last year, April, I worked for the Department of Veteran Affairs in Jefferson Barracks in St. Louis, and corporate America just wasn't for me. My skills were not being utilized at all. Right? So I said, hey, I have to do something. I took a leap of faith, James. And when I say every day I have a reason to smile because I bet on me. And while it was super rewarding work, it was not super rewarding when I looked at my pay stub, right? So I had to find a way to get to what I feel like I'm worth. And so that's why I came to financial service. Not just solely because of the amount of money that I can make here, but because my purpose is to educate us, is to put us, on a level playing field and ahead. And so if I could combine the two and make some money, I was all for it. Like, let's go. Let's teach everybody everything that I've learned, and let's act on it. Let's actually take heed to it and use these products and services to help put us in a better financial space. Absolutely. So not only, James, do I assist people with money vehicles like life insurance, which should be the part of every single person's foundation. I don't care if you can only afford $10 a month.
Come on.
You can get a policy for $10 a month. It's absolutely doable. But I also assist people that have money sitting over in old 401ks right now that's losing money daily. Like, have you looked at your 401k and you left it over there thinking it was doing great? I lost $600 in one 401k in the last 30 days. Needless to say, that 401k was I pulled everything out of it and put it into a annuity. An annuity is simply money that you're sacrificing now being placed into a vehicle that's earning 4 to 12% interest.
Come on.
So that once I reach a retirement age, it's going to pay me income as well. Kind of like that pension.
Absolutely.
It's deferring income now, or that I earned from that last employer at the VA, and moved it to a vehicle that's going to earn at 4 to 12%, so that it grows. That money's growing for me.
Yes. Look,
I'm
folks,
not doing anything
yes,
actively to make that money grow. And that's the kind of passive income we want to strive for. Anything that doesn't take your time, where you're not trading time for money. That's the goal. So that passive income, it'll be there waiting for me. And while I'm able-bodied, while my body's holding up, I can put my money into different avenues so that my money can make more money for me. Because the goal is when I retire, to actually retire. Absolutely. And that means to just live that part of my life as comfortably as possible and not have to step a foot in someone else's job to trade time for money.
Yes.
I will not.
Yes. I want to hit the nail on the hammer. Hit the hammer on the nail. I think that's what I was supposed to say. Something that you said, so people understand. If you no longer work for an employer, don't keep your money over there in their corporate savings plan. You don't work for them no more.
No, because you're not actively contributing anymore.
Yes.
And that employer that was matching or contributing with you, guess what? They're not doing it no more. If you're not
doing that no more.
Why would they?
Don't do that.
Sense.
Don't do that. Don't do that, please. And I know people that do that, and then they'll brag about it. Say, yeah, I got this, 401k that's still over there with my other employer. Why? You don't work there anymore.
And I bet if they looked at it, James, I bet they'll change their mind if they compare the last quarter to this quarter, how it's lost money. I guarantee you. Call me if you've lost more than $2-3 in your 401k, because we can fix that immediately.
The only reason why you should continue, this is my advice, to invest in a 401k if it's a company that you're currently working for and they are giving you a substantial match.
Yeah.
But that should not be your only thing that you're investing in.
Correct.
You should not be solely depending on that. And that's why Sharita is here, so we can help you. Remember I said Dave Ramsey's studies show that 80% of those people that they surveyed, the 10,000 millionaires, 80% of them invested in a 401k. But 75% of them were investing in other things outside of that. And these are some of the things that we need to retrain ourselves. Mm-hmm. Don't pass up free money, but at the same time, don't think that that's your only. We're talking about diversification here. We're talking about building wealth. We're not talking about retiring comfortably. If you want to just retire comfortably, okay, ride that out until the sunset. But if you want to build wealth, you got to do more than that. Oh, Lord.
Yeah, building wealth is so much more about, not about right now. It's about looking long term, having tunnel vision. Because as I mentioned earlier in our chat, is that I'm thinking about my children's grandchildren. Not my kids. Yeah, they're going to be okay.
Your children's grandchildren.
Like, what can I do now? What kind of small sacrifice that I can do now? Because believe it or not, guys, right now is the best time, the easiest time to make money.
I keep telling you.
From YouTube influencers, from all these types of jobs, becoming an entrepreneur. It's so many more ways we have access to creating income now compared to 20-30 years ago than ever.
Absolutely.
So while the opportunity is presenting itself, you have to take advantage of that. So like I said earlier, if you want to be flashy, but make sure you got the income. Go look and seek out other income streams, because like I said, it's so easy. You don't even have to be on anybody's clock now. You can go Uber yourself out. You can go DoorDash yourself out. You can go on Fiverr and whatever your craft is.
They got people now that's renting out cars. You can become your own car rental place.
Car rental. You can be a Turo car on. You can rent out your garage space as storage space to people. You can rent out your pool for pool parties. When I tell you, baby, you can make so much money right now just being creative. You have to be creative with it. And while this opportunity is here, that's definitely an opportunity for you to put more money into your foundation. The core of your foundation that's gonna make sure that everything that you build is sitting on top of this sturdy, strong foundation. And you talked about diversifying. While I talked about putting money into IUL, there's other different things that other things that you can put your money into. I always talk about the 3-bucket method. There's three types of accounts that you can put your money in. You have your life policy, right? That's more long term. Then you have in the middle, the second bucket, you have something that's more short term. So let's say you're 2 to 5 years. This would be something like a certificate of deposit. Yeah, it doesn't earn as much interest as the IUL, but you'll be able to touch it. It matures a lot faster. And then your most liquid type of account is going to be something like a savings account, something you can absolutely go to the bank real quick and get if you need it, and have all three. Have all three. Have a piece of rental property. Have a piece of real estate, period. That's another investment. While it's used for different things, each one of them can provide pros and cons for having it right now or using that income right now versus being able to put it over into something more long term. You definitely have to diversify. You don't want to ever put all your eggs into one basket.
Please.
It's just not smart.
Please.
But we're telling you why you should do that. And when you understand the concept of why having the diversification that you have, then you're able to better, make decisions that are going to benefit you and your goals and your family's needs ultimately.
Oh my God. So I want to revisit, we were talking about the equity and stuff like that and leveraging your cash flow. And you talked about, when you extract this out and you go and you buy something that's going to make you more money. I don't want people to miss that, right?
Okay.
Oh, but before I say something, would y'all do me a favor? Come on, y'all. Now, this woman is shooting stuff. People are coming on this show. I'm not getting paid to do this. She coming on here just to share knowledge and wisdom. We just met today through my sister, right? So would y'all at least do me a favor? Do us a favor. Press that heart button, press the thumbs up like button, but more than that, will you please share this video? I currently see like 3 shares. If y'all know that this information that she is sharing can change not only your life, but the life of your family, friends, people that you know, co-workers that you know are struggling, will you share this video? Share it to your page, send it to them through a direct message. You could do that on Facebook. You can send it to anybody. And because we're streaming on multiple platforms, I want people to have the flexibility to be able to share in multiple ways. Because on Facebook, it only allows you to share a certain platforms, certain ways. But on YouTube, it gives you a little bit more flexible options to share it. So please share this video, because this content right here, this is information that can change your life and the life of your children and the life of your family. So when we talk about this extracting the equity out, putting it in a system, do you know, folks, that you can have 2 properties and I'm talking about basic properties. I'm not talking about multi-families, and I'm not even talking about duplexes or quads. You can just have basic single family homes, and you can cash flow yourself probably about $20,000 a month with the right purchases for single families. I mean, not $20,000 a month, $20,000 a year. $20,000 extra. So just basic math on a basic. You talking about basic real estate. We ain't talking about. I ain't even getting into the multi-unit stuff, right? 8 to 10 properties will cash flow you about $100,000.
And even more, James, if you decide to like Airbnb out.
Right. If you
Short-term
Airbnb
rental.
out, thank you. You can cash
multiply
flow
that,
yourself over
10 times.
$100,000. Thank you. Cash flow yourself after expenses.
Yep. And
don't fool around and make no additions, like remodels or something to them with the Bird method. Don't do that. You're talking about creating a serious nest egg right there. You could literally cash flow yourself $100,000 easily. And then if you buy a duplex or a quad or some type of multiplex building, 6-unit, 8-unit building, you can easily cash flow yourself $100,000 extra a year and still go to work. I ain't planning on leaving my job. They pay me too much. But I'm making some moves right now, trying to close up some financial and stuff. Good Lord, these people will drag you out forever too. Find any reason to drag you out. They know they want to give you that money because it's my money, right? They know they want to give you the money, but I need to get a statement of your birth, when you were born, from what hospital. If you could find the doctor that, actually pulled you out, your mother, so we could just double check with him if you really are who you say you are. And also, can we count how many children you have again? Because we think you might have missed one, and we want to make sure that we count all your children. And also, we want to know what's your blood pressure, and what kind of diet do you eat? Do you eat pineapples? Because we don't like to lend money to people that eat pineapples. And so they're going to find any kind of reason just to drag you out. So you got to be persistent. Mm-hmm. You got to be focused, and you got to conduct yourself in a way to show people where you're going. Don't cop no attitudes and start getting angry and start switching your neck around because they, asking you for stuff that you think is unnecessary to give them. Just stay the course. We're helping you, and just go and get your money and go and get your financing. So I'm sorry, I got a little distracted there. We're talking about extracting this equity out to buy appreciable assets, right? So this is another stream of income, in essence, that we're talking about that you can create for yourself. Then when you create that other stream of income, now you heard her talk about going and buying that Louis bag. Because now you just created another level of income. You're leveraging the equity, and you're leveraging the equity that you're extracting out, and you're leveraging your policies and these types of things, so that you can use that cash flow to buy those other things. You know, like if I want to go out and be like Deja and buy me a Porsche, I'm not going to do it on my current income. This is my income for this. I'm going to build my other stream of income. Now I can go out and buy that Lamborghini or that Aston Martin or that Porsche or that Louis bag or that Birkin bag, or, you know, or take that fantasy trip that our family been wanting to go on to Paris or Greece or wherever. Right? Y'all understand it? You want to leverage your cash flow. Leverage your cash flow by getting assets that's going to pay for the other things that maybe are not assets.
Mm-hmm.
I don't know.
Somebody asked in the messages, how do you get started with purchasing property? And I just want to give you a glimpse of what that may look like, Miss Rochelle. So imagine let's say you had $10,000 over in a 401k. Not very much, you know, but it's sitting over there. You left it over there thinking it was going to do some awesome things, but nobody's contributing to it, right? So in this example, what I would recommend for this person to do is pull that money out, right?
Yes.
Pull that money out. You could possibly take that, and because certain tax situations allow you to pull money out of a 401k and purchase a home.
Absolutely.
I'm a tax lady, right?
Hello.
You can use that money to purchase a home.
Absolutely.
Live in a home. Let's say it's a tax lien home, just something basic, right? Take that money out, go purchase that property. Get a write-off on your taxes so you don't have to worry about that fee on your 401k withdrawal. Live in it so that it actually is your home for a while for tax purposes. Live in it. Fix it up while you're in there. Put some sweat equity in it, right? Once you get it to your liking, go ahead and move out, right? I would say go ahead and rent it. Rent it out. Because you'll own it free and clear, there's no mortgage. The money that you'll have coming in, whether it's a short-term rental or a long-term rental, whatever that income is, you take that money and then you allow that to pay for your dream home or whatever you are, or let it build equity, borrow against it because the value is now more because you put sweat equity in it.
Yes.
Use the money you pull out to purchase another property, or let that pay for your dream home. And that way you'll have the opportunity to always have that income stream there, whether you know, no matter what happens, if you want to leave it as a legacy for your children, whatever, Airbnb it out, whatever you want to do. Make it a home for the veterans. Get a government contract on it. There's so many ways you can make money with one piece of real estate. It's crazy, right? So if you do something like that and do it properly, you can easily have multiple properties under your belt with just something that you've been you left over here. You probably forgot about that 401k, you know. But if you leave it over there in that 401k and it's losing money, you won't have that option, you know, especially with the way this market is right now. So I if that's not an option for you, I say pick up a hobby, something that you can earn money from. And like I said, so many things you can do. Babysit, you can do hair, nails, eyelashes, you can walk dogs, pick up poop, you can write essays, you can do whatever you be. Look for income streams. I know a few businesses that I train people on myself to get them over from employee mindset to entrepreneur mindset, because it benefits us in the long term to become entrepreneurs. Period. So many advantages. Tax time advantages, everyday living advantages. You know, then you have those people that we can recirculate our, what you say, how many $1 trillion of
1.6 trillion.
1.6 trillion dollars that we earn. We can recirculate that, put it back into our communities, and we can turn this all the way around. It just takes, you know, for us to have the knowledge there and be willing to work with each other, and don't be afraid to teach somebody else something. You know, I encountered that so much as a young woman, that I was like, I'm never going to be that person that withholds information that could help someone else succeed. I would never be that woman. But
Yes.
I've encountered that, right? So I just
Yes.
wanted to be the change that I absolutely wanted to be. And like, that's just one scenario, you know, with the
Yes,
401k
yes,
or
yes.
going to find a side hustle and turn it into a business. If you need help with doing that, that's something I also can assist you with, because it's not as hard as you think. You just have
Yes,
to know the right
yes.
person that's willing to give that information and content to you and show you where the resources are. And if you need somebody, call me. I'm more than happy. I don't care where you are located. Pretty much it's the same concept no matter what state you're located
That's
in.
right. That's right.
Show you how to go buy stuff wholesale, how to register a business, how to grow that business, scale it, how to obtain business credit so that you don't have to use your personal income. You can keep working for someone else if you want to, and let that pay your regular personal expenses and build a business that's going to pay for your wants,
Yes.
not just your needs.
Yes.
You know, until you can fully go into that full time and leave the employer. Like, it's, hey, I'm your person.
Look,
You know, and you're on this
Yes.
you're on this chat today, this podcast today for a reason.
come on.
And maybe it's just to hear some of my nuggets. Maybe it's, you know, you're the next person I'm speaking to on the phone. Who knows? But you're going to walk away with more than what you came with today.
Yes.
And that's our goal. Right, James? And we
Yes.
just want to get the
Look.
information out there to you.
Everybody should be running a business, even if
Yes.
it's just a little something on the side. And I'm gonna tell you why. It's for the tax benefits. Look, when a certain person who was president, I ain't gonna say his name, took your exemptions from you and some of your tax write-off, personal tax write-offs, and people, because they don't keep track of it, all they want to do is get that, you know, standard deduction, whatever they do. They wasn't even planning ahead. If you run a business, look, sometimes you can write off airline tickets, all kind of stuff. If you're going to do something there, I have a music business and another business on the side. So if I go out of town or something, if I go to somebody's church and touch the piano, guess what? I'm writing that airline ticket off.
Okay, check.
I'm telling you. And if I go out to dinner with anybody that's on the praise team, I'm writing that dinner off.
You better.
I'm trying to tell you. So everybody should be running a business. One more thing too, and I know she can talk about it, is extracting the equity out of a home. If it's your personal home or a rental property, whatever the case may be, the principle works the same. If you're going to refinance, it burns my bottom when I see people refinancing and all they want to do is get a lower payment. Look, do a total cash out refi. Get your equity out if you're going to go that way. Even better, don't do that. Go get a HELOC, a home equity line of credit. You can now use that anytime you want, no questions asked, and you just go and extract the money out and do a draw.
And then recycle and rinse and do it over
And
again.
rinse and do it over and over and over and over.
As you know, in order to do that, you have to first be living within your means. You have to know how to properly utilize credit, because it is a factor in something like a HELOC. You have to know what the what your utilization can't be over a certain amount. You have to properly use credit, and there's nothing wrong with using credit to get the things that's going to help you make your money make some more money for you, right? If you use it properly, credit is definitely a game that you can play. And we can talk a whole nother podcast about that, because
that means you're coming back, right? You coming back?
And using other people's money.
Yeah, that means you're going to come back, right?
I definitely come back.
We going to have her back. Hey, are we pressed on time? Because I know you got a Zoom call to do, right? Are we pressed on time?
Let me see. I got a good 20 minutes.
Okay. So I'm going to use her for another 5-10 minutes then. So did y'all hear what she said, though, about how did you say it? Wash it. I've said it before, though I can't get it out.
Wash and rinse and reuse.
Wash, rinse, and reuse. Wash, rinse. So the principle stays the same. Look here. The reason why wealthy people use these strategies, whether you got $50 million or $50,000, the technique and the principle and how you do it is the same.
Yeah.
So you're using it now. So one of the things when I talk about leveraging your cash flow with equity and stuff like that, it's the same principle that guys that got $50 million projects that it's the same thing. It works exactly the same way. But here's one of the reasons why I said earlier why some of these things I get real hesitant to talk about is because I know how bad the average person are with their budget, with their living beneath their means, with handling their credit. I know how bad so many people are. And if you don't educate yourself and really deep dive into this conversation and begin to research some of these strategies that we've shared today, that Sharita has shared today, you're going to get out there and you're going to mess yourself up and dig a deeper hole. And one of the things that I keep saying is you got to change your mindset, because however you are with your financial habits with $20, it's the same way you're going to be with $200. And however you are with your financial habits and your mindset with $200, it's the same way you're going to be with $2,000. And however you are with $2,000, it's the same way you're going to be with $20,000. However you are with $20,000, it's the same way you're going to be with $200,000. And however you are managing $200,000, it's the same way you're going to be with $2 million. So if you can't handle managing $2,000 well, living beneath your means, setting yourself up to be able to do some of these principles that require discipline and good financial management skills, you're going to dig even a bigger hole for yourself. Because if you think you stressed out with $2,000 managing that, you sure as I don't know what going to be stressed out with $20,000 and $200,000. So get your management skills intact. Go and start retraining yourself and educating yourself and reading books. And there's so many doggone YouTube videos out there now with people sharing this content. And Sharita is saying, look, I'll make myself available to really bring you along and show you step by step. But y'all better pay her. This girl, she has a consulting service. Don't you have a consulting service? If not, you're going to start one.
Most definitely.
Yeah. So don't go in there. We're talking about this mindset of my mentor has to be 80 years older than me is crazy. She has knowledge and skills. She can mentor you into a new mindset. But you got to make sure that you begin to really get a handle on what your current situation is. Sharita, can I show you another statistic? Yeah. We talked about what the average annual income is. Okay. Right? And so I want to show that on screen, because all of the sisters, now y'all know that the sisters that be on this show, they married. Right? And so all the people that's acting like, well, I just want to stand at the finish line and wait on my Boaz. These sisters are married and they have built with their husbands. And I told y'all in the last show that we were talking, where it's like people think that certain men that's trying to build of a certain status and certain income level, that all we want is some pretty arm candy. No! I'm single, Sharita. That's why I'm saying this and bringing this in. Because that's the fallacy. No. We want somebody that's intelligent, that knows, that can Sharita, am I making sense?
Yeah.
Why do people think that men that are successful in trying to do something, they just want a pretty woman that's stupid? No. But the reality is, folks, here is the average annual salary for people, black women and black men in America. So, wow. Why is it a problem to go and find somebody, and both of y'all average, maybe ladies, you are a little bit above average, and this guy just average earning income wise. That is not indicative of his heart and ambition and his ability to get better and grow, right? But this is the average annual salary of a black man in America from what? From 2021 November. This study was done by the Washington Center for Equitable Growth. Wow. $43,000 is the average annual salary of a black man in America. And ladies, The average annual salary for a black woman in America is $40,500. So instead of us fighting against each other, why can't we come together and start building up our marriage numbers like we used to be back in the 60s, 1960, the 50s, 54, when they talked about the black family in 1965, right? Mm-hmm. Because if you just want to be out here on your own with your $40,500, or brothers with your $43,000, if we join together, we've just doubled our income and our buying power. And we're down to one mortgage, one gas bill, one water bill. Hello, folks, right? We got to begin to retrain our mindset to build together. But no, I know hypergamy sets in and you making $80,000, so you want a man that's on your level because you think that just because you went to college and got a degree, that blue collar man that's walking around in those boots, you think he is at a certain level because he didn't finish college. But if he's in any type of union, any type of skilled trades, I'm trying to tell you, these brothers out here bringing some major cash in.
Hey, can I say something?
Yes, please.
Here's where I stand on that. Two incomes are always going to be better than one, right?
Hello.
I can honestly say, in my household, I am the breadwinner, right? I make about 2 to 3 times the average woman, right? Mm-hmm. Based on your statistics. My husband does not make that. But because of my husband's presence, I'm able to move in totally different ways.
I'm trying to help you. I couldn't
move as a queen alone. I'm gonna tell you this. I don't care what your ideal person looks like. Anytime you have someone there that is supportive in every single thing that you do,
thank you.
Somebody that where you lack, they are strong at, and vice versa. The money don't matter because it's coming into the house regardless of who makes it. It's going into the exact same home.
Thank you.
And yes, having a husband, and again, that's a whole nother podcast. But
come on, having
my husband is totally different if I'm looking at finances than being single.
Frees you up.
Yeah, you'll have people that'll argue that he's supposed to do this. I just don't agree with half of it.
I don't either.
Because as I mentioned before, and I know from my own experience that I absolutely would not be where I am today had I not met my husband 7 years ago. I don't care how you look at it, how you twist it, how you turn it, your perspective about any of it. Yes. I absolutely am not where I am today had he not come along and supported me, pushed me. When I didn't have it, he had it. You know, there was 2 bills that went down to 1 on every kind of bill there is. You need that. You absolutely need that. It is important to have. And I say take away every kind of stereotype about every single person there is. You never know what value someone can bring to your life if you are only looking for one particular type of person.
Thank you.
And when I actually left out of a super long abusive relationship and found my worth back, my husband literally was right there waiting for me. I wasn't seeking him out. God just aligned all the stars and he found me, and it's been magic ever since.
Thank you.
You just never know who God sends for you.
I hope y'all listening to this.
Your mentality is what's stopping you from seeing that person.
Thank you.
I'm going to say that, and I'm going to leave it alone.
Yes. Look, Sharita, you ain't even been watching the shows. And you said everything that validated. Y'all go back and watch the shows. Stuff that folk been getting mad at me about that I've been saying. She just said it out of her mouth. We just met today. We ain't even talk about that. I just told her, say, Sharita, be open and flexible, because sometimes I do go into things regarding relationships and marriage and stuff, because the statistics show that 86% of millionaires are married. And currently, black people, we have the lowest marriage statistics in America of every major ethnic group. And one thing that's killing us is these crazy mindsets that's killing us right now. And I'm glad she shared her story so you can hear it. We've had married women on this show that are doing well for themselves, and they are married. And this ideal that men are trying to dumb women down is a bunch of foolishness, and y'all need to stop listening to it. This ideal that men want to keep and control women, y'all got to stop listening to that. This idea that all he wants is just somebody pretty, he don't really care about, y'all better stop listening to that. Because that kind of mindset, and I said it the other day, and I got pushed back on it again. I said two things. Is your perception, has that become your relationship reality? And I also said, y'all ready for this? I also said that the Proverbs 31 woman was married. And I had some people say, but she, no, she was married. Read the scripture for yourself. And she was a very intelligent, industrious woman. So I'm just here trying to help you. So when y'all start saying that I don't like black women or I don't like, y'all need to just cut that out right now, because because think about it. This is about building our culture back up. In 1960, ladies, you had a 5% probability that you would not get a husband. But nowadays, because we bought into all of this foolishness that wasn't meant for us, I know you want to be a feminist and an independent, strong black woman. I get you. Now, it's folk all over throwing fits over this video that's going viral from Father's Day that T.D. Jakes preached. Because folks trying to say, there you go again. See, that's why I don't listen to him. Because all black men do is just try to keep black women down. Black women have been so abused and so mistreated and so this and so that. Yeah. I'm honestly tired of hearing it. Has your perception become your relationship reality? If you're swimming in a pool that got piss in it, why y'all acting like the only men is in the pissy pool? There's a whole nother level of men in a whole nother pool. And they don't think like that. They don't think like Pookie and Ray Ray. Sorry, Pookie. Bro, I love you still. I still love you. And they don't think like Junebug. They don't think like the dude from the hood. Even though they may be from the hood. They trying to grow and build. But if all you want to do is stand at the finish line and wait on one man that 2,000 other women is standing at the finish line waiting for him too. But you say you don't want to build a boo, and you don't want struggle love, and you don't want this, and and I don't want to settle. Sharita, I've used up at least 10 minutes of that 20 that you had.
It's okay.
So before we close and wrap up with Sharita, and we got to set up something to bring you back, because this has been really good. I want to just give the floor to you to say anything and share anything that you want to share before we wrap up.
If any of you are interested in any of the services that I mentioned throughout the podcast, I can be reached at 314-915-6995. You can also add me on Facebook. My name is under Sharita Green, and it has Sharita Toaster in quotation marks on the side.
Yep, and I did tag you in the video, so okay, your name is tagged in the video. But awesome. Quote that, please give that number one more time,
314-915-6995. I can be reached. Text me first. Just let me know who you are, and then we can set up a time. I'm also would appreciate anyone and everyone that you know that may have mentioned that they need a life policy, something in place, because we just see too many GoFundMes out there. Please reach out to me. I'd be happy to get a quote. It just takes a few moments to get some basic information to get the quote to you. And then also, if you are somebody that's looking for different avenues of creating income, I also have several options there that I can assist with training and coaching and developing to start those types of business, so that we can get you over from the under 100,000 to over to over 100,000 in income. And like I said, I'm all game with educating people. So let me know. But it's been an absolute pleasure just being
being able to be a guest today on your podcast.
Thank you so much, Sharita. Hey, and this has been a great opportunity for us to really begin to change our mindset. So thank you so much for coming on today. And once again, y'all share this video with your cousin and your aunties. You'll share it with them. If you've been watching on YouTube, ring the bell so you get notified. This information and this conversation has been invaluable. So right here on my personal page, I'm encouraging you once again, share this video. Please. If maybe you all good and you set, but you know some folk that ain't. Share this with them. Share this video with them. All right. So I got to go. I gotta go. So guess what, y'all? We out.